Hello and welcome to ITWeb TV, live from Security Summit 2025. Sure, there's a lot of 20s going on. It's our 20th anniversary. It's 2025. And do you have any 20s? Nothing yet.
No, yeah.
Okay, so let me introduce you properly. This is Zamani Ngidi, who is the Business Unit Manager for M&A Solutions, M&A and Cyber Solutions
Correct, yeah.
for Aon South Africa. Zamani, thanks for joining us.
Adrian, thanks for having me.
So today we're going to talk a bit about the insurance industry. We're going to talk a bit about AI, obviously the cyber. So based on your presentation, have you done your presentation yet?
Not yet. I'm doing it an hour from now. So okay.
So this we'll think is a warm-up.
Yeah, thank you.
Get all the good stuff out first, and then you can just bore them.
Give them with the
Okay, cool. So based on that, you're talking around the changing insurance landscape and the role of, or in the age of AI. So how has AI been used in the insurance industry?
Yeah.
And like in cyber risk underwriting particularly, you're able to kind of give that level of context?
Yeah.
Cyber risk and claims.
So I think the thing that, especially now that we've got to really kind of make a clarification on is that AI has been around for a while, right? So even on our phones, we've had AI. I think the piece that's really big now is the generative piece. So around generative AI, we're starting to see a lot more use cases within our organization around chatbots that can provide kind of contextualized advice around policies, around what kind of coverage is appropriate. And I think what's been useful is that all of that information is effectively still being vetted by a real person that's actually qualified to provide that advice. So I think over the long term, what they're actually trying to do is train these models to be able to be a lot more concise and more specific. So in the claims platform, same thing, right? You're now more than likely when you do a claim, you're actually dealing with a bot. If it has to do something really contentious and complex, you might deal with a human, but all the kind of low-level stuff, it'll handle. AI is changing the landscape of how a lot of fintechs, even the traditional brokers, incorporated to effectively better operationalize or get operational efficiencies from their business. And going forward, I think use cases are going to change, right? So this is kind of the early low-hanging fruits of what we can see. But as this stuff keeps being deployed, you're going to see more innovations. I mean, there's a lot of brokers that are trying to use that tech as a real platform. So yeah, I think that's it for the moment. The next piece is kind of what are the risks that come from that. I think that's an interesting piece.
Yeah. Well, let's talk about that. I mean, what do you see the risks being? I mean, obviously things go wrong.
Yeah.
Things can go wrong and you don't know why it's gone wrong, or it spits out results and I guess the hallucinations we see in generative AI. I suppose there's a potential that could happen.
I mean, it's unknown unknowns, right? I mean, so one of the things when I was looking off the TMC for EMEA is you look at kind of front and center what happens when the tech doesn't do what the tech's supposed to do. But I think what we're seeing globally is because of people deploying AI, there's now a component where kind of traditional risks are transpiring in a new way. So, you might get a typical kind of libel or, a liability lawsuit that is derived from AI having committed an error. But because of the way that policies are set up, you look at, as an example, I think it was in Poland, right? They hired, I think it was like an alcohol beverage company, hired their first AI CEO. There's a product called D&O insurance, right? So D&O insurance is meant to cover the directors and officers as living beings. So now all of a sudden you have this exposure of, well, okay, who's actually providing the advice, right? Is it this AI? Is now the board absolved from any kind of bad decisions or liabilities that bot would pick up? So there's all these kind of nuanced things that are transpiring and saying, okay, there's all these kind of old risks or traditional risks that are materializing differently, but also there's kind of risks that are new that are materializing in kind of old ways, right? So you have, as an example, a train that has, I think it's called the channeling. So if that's being run by AI and actually you redirect something somewhere else and causes a calamity, whatever the case may be, how does the insurer on a property insurance perspective cover that? And it's unclear. And I think that the biggest thing is what we're starting to see now with a lot of policies is that people start carving out, because if you have a property claim that happens out of AI, your property underwriter is like, well, this product wasn't both of us, so I'm actually going to start clawing that back. So there's all these things that the insurance market is trying to grapple with. And I think the bigger thing is that once those start wrapping up, you're probably going to start seeing a lot of change in coverage.
So obviously I'm not an insurance expert, and that's why you're here. The one thing that's kind of, when we're talking, that comes springs to mind is the claim side effect. Like, I'm sure there's some kind of, and probably been doing this for years, is kind of putting some analytics on the claims to track and see, okay, this is a false type of claim, or there's an unusual behavior in the way that they're trying to claim in. Is that something that has been the case? And like, are you seeing that evolve more?
No, certainly. I think the big thing is, so Aon's just released something called a cyber risk analyzer. So effectively what we're doing is aggregating a lot of data that we've had and developed on kind of looking at operations where we do something called a cyber impact analysis. So we'll develop these scenarios of how can these risks materialize and then put some commercial kind of quantification around them. So we've aggregated this kind of across the Aon universe, and we put on some data and some AI to be able to posit to clients as they look about their risk to say, okay, actually, if I'm a tech company with X amount of records on file, these are the exposures that I'm looking at because of the profile that I have, analytics that I put together. And I think to the point that you're trying to make, which is more local in terms of people that have car insurance, right? So if you're going to a certain area, it's going to pick up like, hey, that's a high risk area. So that tech is being deployed, already. And I think in its sophistication is just going to get more and more kind of better with time.
But it's not something that Aon, I guess you've got corporate clients rather than.
Exactly. Yeah. So we actually have a bit of both, right? So on the corporate side, it's kind of that sort of the kind of the first scenario about how do we aggregate data to be able to give clients a really bespoke message around their risk, but also on the affinity side, so the people aspect. So your own individual, like Adrian's own insurances, we also do that, right? So helping folks on the ground to realize like, hey, don't go there. We're seeing a trend in this particular area. Be on the lookout. So, and that's all risk management, right? The advice that we actually give clients is that aggregating that data to be able to give you some kind of tangible output you can use.
And I think that's an interesting point. And it's probably not quite as pure Aon as I'd originally thought. But I mean, the idea of personalized insurance, I guess, is that something like, is that one of the benefits do you think that AI is going to give to the market? Are we going to start to see more innovative products as a result of that Zamani kind of dials up and says, oh, I've got this type of house and this type of car, and I only do these type of kilometers, and then it's kind of going to.
Yeah. It's at that stage. I mean, you look at insurance and anything financial, right? It's a super regulated industry, right? So I think those innovations conceptually are there. It's just about how do we actually implement them within barriers of the regulatory frameworks that we have, right? So organizations now are dealing with the joint standard frameworks that have been mandated by regulation. So in as much as that we want to innovate, we want to make sure that we meet the regulatory obligations first. But I do agree with you, right? There's going to be super bespoke kind of, this is your actual client profile, and actually having a broker that's going to be able to put that argument across to the insurer, right? To say, well, if Adrian doesn't do X, Y, and Z, so we can justify the premium to go down X. But I think from a pooling perspective, insurance is out of Lloyd's, right? All of that is kind of reinsured from, South Africa and various regions. So they aggregate their data to be able to come up with premiums for the cost to actual capital. So getting it that bespoke, I think it's going to take time to delineate to that level, but I think it definitely is something that's, yeah, exactly.
And then cyber insurance. I mean, that's something that's ever been around for a few years, but and I'm going to ask you because you're the expert, let me not make assumptions. Are South African businesses kind of coming to grips with it? Are they aware of it? Where are you seeing adoption? Is it particular types of industries? Is it particular sizes of companies? Yeah, or is there like still a knowledge gap among?
I mean, this is true. Yeah, I think one, right? So when the early adopters have always been banks because of regulation, right? So more and more what we saw, and especially after COVID, we saw a huge uptick in the request for insurance. And I think conceptually people are starting to grapple around that. I think for me, one thing that I find interesting about cyber is that the threat actor is a lot active, right? So from a risk perspective, you look at any insurable risk, it's really kind of things that happen haphazardly, right? But cyber, you've got this really coordinated kind of actor that's trying to gain access. More than likely, they're going to, if they do gain access, which they will, there's going to be financial loss associated with it. So we always take the thinking of it's not an if conversation, but it's a when thing, and more and more clients that are starting to have that conversation. So you're starting to see things in mining. I think companies that have been listed, King 4 helped considerably with talking the things around business resilience. So that is that's just picking up, and I think the big thing for the market in South Africa is really creating a product that is specific to the SME price point. So, a lot of, and I mean, this, a lot of things are kind of built from kind of the top echelon clients and then working your way down. We're really working on what are the bespoke risks that South African businesses are concerned about, right? It's probably theft of funds, right? Intercepting a mail that then redirects funds somewhere else. That's something you need to build on. What's their security infrastructure have to look like, right? They might not have, the money to hire, big four audit company or, ourselves as an example, but we need to give them some kind of low resolution understanding of what they need to be looking out for and then supporting them with that. The penetration of the market is fairly low and we still think there's a significant amount there, but it's just about educating clients, right? Educating that there's a cyber IT component, but there's also a risk and financial component here.
So how long do you think we're going to start to see, and maybe we have started to see and I've just kind of been blind to it, it happens a lot, but how long before we start to see like consumer level kind of advertising cyber insurance products to SBs?
So that's an interesting question. I think it all comes down to the sophistication of South Africa's buyers, right? And it's largely because, I mean, if you look at our market when it comes to things like mobile banking, right? We're trying to get the person on the ground a lot more sophisticated in understanding the stuff and understanding the implications. So for businesses, when you talk to a guy who's 60 years old, has been running a company for 40 years, and telling him that his biggest risk is cyber, he's going to look at you as like, mate, I've been running this thing for 40 years. No such thing. We need a lot of education. We need a lot of visibility around actual incidences that have happened, and that they do that well in the US, they do that well in the EU. Sure, we're disclosing stuff that's happened, but they're not actually giving a light as to what's the financial component. You've seen a lot of breaches here, but people are like, yeah, it's a big organization, they can probably handle on the balance sheet. And some people are like, oh, actually, we need to think about this. So I think a lot of that comes from regulation, a lot of that comes from information.
I think we can talk to some CISOs, or we probably have done over this today and tomorrow. And I think that's probably going to be the same with cyber awareness amongst our own employees. It's not just let's put this sticker on a wall and make sure that they all kind of see it once. It's that continual repetition, I guess.
And that's the big thing, right? The guy on the ground doesn't, in as much as he hears that XY has been breached, doesn't actually think about what that looks like from a tangible financial risk perspective. But traditional insurances are really easy, right? You see a building worth $1 billion or R1 billion, thing gets crumpled down. You're like, oh, we just lost $1 billion. But cyber is a little bit more opaque. So we need to make that messaging, just to your point, right, around CISOs and kind of organization wide, but also man on the ground to understand your information's been lost. You can actually go out and sue someone because they've lost that information and you've lost something in your own personal defense.
So then the process of like business was buying cyber insurance. Yeah. But I guess also from your point of view as an insurer, then you've got, and I'm sure there's talks around a third party risk in the conference when some of the CISOs that we've spoken to talk around, like they go and do their due diligence on their partners. And they kind of put priority levels based on how much data they're sharing with those. So if you're insuring like a top tier company, how much attention do you have to pay in due diligence do you have to pay on what their kind of who their partner ecosystem is and that level of complexity?
So I think one point of clarification there, right? So Aon is an insurance broker. So we're the intermediary between the insurance company and the client, right? But to your point, I think the big thing is that they're trying to understand the risk from a kind of overarching governance perspective. So very much to when you would insure your own car, they'd ask you questions about. So those things they ask, but then kind of insurers on an ongoing basis will do vulnerability scanning on public facing domains. If they're seeing a trend in a particular pattern that leads to claims, they'll actually flag that to the client and say, listen, we need remediation for this fairly soon. And we're seeing kind of diligence in that component, definitely on cyber insurance in itself. And what we're starting to see more and more of is that within transactions. So when a company is buying another company, they're now starting to look at kind of, what's the cyber component share? What's the losses? Can we put that on a balance sheet? Do we need to explore insurance as a metric to transfer that? So there's a lot of tools, I guess, is what I'm trying to say, that we're trying to bring to clients to reduce that risk fundamentally.
Okay. And in the public sector, like, I mean, it's very kind of cliche, but I think we tend to, as the private sector, tend to kind of run as fast as we can.
Yep.
Typically, the banks run faster, but obviously they're confined by regulations. But there's a lot of innovation then. Public sector tends to kind of drag due to resources, due to whatever reasons. And what's the insurance like in the public sector? As a cyberspace.
So what's interesting is that you have a very few carriers, and what I mean by carriers is insurers, actually have appetite to underwrite public entities, which is the first point of call, right? Speaking to exactly the point you're making is that you have called it a very laggard in adoption type of profile client, and they need to make considerations for that. I think we're seeing a lot more inflow around queries from those kind of organizations because they're seeing the breaches and they're seeing the value behind it. And also there's a double-edged sword there because what a lot of private companies use insurance for is effectively giving them an indication as to how appropriate their risk is, right? So the rationale there is that there's no regulation in our country that says you should have penetration tests done, et cetera, et cetera. In their mind, they'll say, if I can get if I'm still insurable, probably have a decent enough risk. So they almost use it almost like an audit to some degree. The public sector is now being exposed to that. And it makes it very difficult where we go to a client and say, look, we need insurance. And we go out and say, okay, cool, give us this information. This is what we see. And we go back to them and say, listen, you need MFA, you need pinch testing, you need all these things. They then have to go through a procurement process to actually go get those things and then, implement, which is a really clunky process. But they're starting to see the value behind the product in itself, but also that other added element of understanding that their risk is actually insurable, fit for someone else to be financially responsible for it.
And then maybe my last question, and I'm really going to test you now. Should have a crystal ball somewhere.
Okay.
But where do you think the kind of those three circles of AI and cyber
Yep.
and insurance
Yeah.
over the next 5 to 10 years, how are those three going to evolve like in that kind of magic Venn
diagram? Yeah. I think that there's going to be an acceleration of cyber related losses that are AI driven. I think losses that are AI driven. And what that's going to do, just from a pooling perspective, is that it's going to require insurers to almost carve that out and almost have a bespoke AI insurance policy that covers those risks. From an insurance perspective, in the nature of technology, there are two ideas that don't really blend well together, right? If you want to insure something, you need proof of all the losses. You actually need to be able to price for the thing, right? Which means proof of what's the loss history, etc. But anytime you innovate and add a new layer of complexity that can lead to different kinds of losses that are really big, I think naturally insurers are kind of uncomfortable with that. So what you're probably going to see is either some kind of carve out or kind of what they call like an add-on within cyber or tech E&O policies that actually speaks to AI. So you basically are buying that back from the insurance market. So I think there's going to be a lot of that. And I think the other aspect is that how sustainable is that practice? Because we're in a digital world now with a lot of innovation. If I'm selling someone a product in year 1, year 4, I tell them that product is no longer actually fit for purpose. There's a new kind of product that's required. They're going to look at me and be like,
just trying to scam me.
Exactly. It feels a little bit like a scam, right? We're just making these things up. So it needs to, there needs to be a little bit of a change. Sorry, go for it.
No, I was just going to say, it's kind of like when you mentioned earlier, it's about that kind of evolution and like you buy an Apple iPhone initially and like there's only so many
things it can do.
So year by year, you add in new
Exactly.
And now when you're up, you kind of run out of new things to add. So
I think for me, that's the big thing is like clients are, and because of all this data, it's almost like losses over especially a longer term period, losses are going to become more known. So you think about climate's a really good example, right? So you think about what happened to LA and all the fires, kind of all the insurers actually left that market because all the data was telling them there's going to be fires there. It's like, you guys need to make sure that, the water system can pump out all the commensurate of water, et cetera, et cetera. And if people don't do that and something bad happens, the insurance market's not going to be on the hook for it. So it's almost like over the long term, because of how kind of data, because of how tech is developing, you're going to see a lot more known knowns, and the unknown unknowns are going to be almost these black swans that are really big and cataclysmic because they're going to be systemic by nature. And I think the nature of insurance to some degree, it doesn't lend itself to innovation, right? You're insuring a chair and you can see the chair. And it's like, okay, cool. If that chair disappears, I will pay you X. It's opaque. And so if you attach all these liabilities, it feels to some degree that like, what am I actually insuring? How can I actually price for this? And if the activity around the losses that occur to it spike up dramatically, effectively insurance markets are gonna be like, actually, this might not be something that we can insure for because we know that the quantum of loss as and when it happens is too high. So I know I didn't give you the crystal ball answer.
You've given me some insight.
So yeah, a view. Hopefully it's useful.
The audience will tell us. Zamani, that's been great. Thank you so much. That's been Zamani Ngidi from Aon South Africa. Please remember to stay tuned. We'll be back shortly with another interview on ITWeb TV Live. Brought to you in association with Snowed.